So if you had 70% of a product that most people don't even care about or what it's worth or anything, then that really could suppress the market. And the other part of it is that our industry is pretty smart in the ingenuity of the human being, because, hey, if you don't care about this silver, let us buy it from you as a stream. We'll give you some financing. Here's what we'll do. And so that started a whole new industry, basically, in the mining industry or the royalty space.
This is Little by Little with Andy Schechtman.
All right. Good afternoon, everybody. Welcome to another episode of Little by Little. I have with me someone who absolutely needs no introduction, someone who means a lot to me, someone who I wouldn't be where I am, believe it or not, David. I know you're a humble guy, but I wouldn't be where I am had I not met you, and had you not done for me what most people in your position probably wouldn't have done. I will forever be grateful. I will forever tell everyone, whoever asks, what kind of a human being you are, not only a hell of an economist and someone who understands what's going on in the markets, but a good person whom I have forever tried to pay it forward to people like our common friend, Maurice Jackson. That's for another day. To people on the outside, you're a precious metals expert. You're known for your extensive knowledge on silver, the silver market. You're the founder of the Morgan Report. When I knew you, there was no YouTube really. People read reports like yours all the time. And I couldn't think of anyone I'd rather have on my show. I consider you to be in this industry a friend, a mentor, someone that I look up to in many ways, not just the silver guru. So first and foremost, brother, thank you for coming. And how you doing today, David?
I'm doing well. Thanks for inviting me. And you don't have to overdo the introduction, but yeah, I was happy. You go into the story. I see it a little differently than you, but so much fun, especially in the early days. We had 11 year in a row bull market for gold, and silver actually outperformed in that stretch. Had a couple of years that didn't have a year-over-year gain. But, meeting your dad and your mom and just kind of relaxing after one of the shows. And then, you can pick up the story from there. But, to me, it was just a way to get to meet more people in the industry. And, of course, I knew your dad's affiliation with Investment Rarities. And, I've been in this for such a long, long time. So, some of these people, kind of casually because the different businesses and that type of thing, but then you get to meet them, which makes it much more real. So I always look back on that first invitation to that, I think it was a money show in Las Vegas, as kind of one of those things that was also beneficial to me. And you got a couple of funny stories around it if you want to go that deep. But anyway, go ahead.
I do, and I am gonna go there. I'm gonna back it up a little bit, because to me, I was a greenhorn and you were the expert, and it was such an honor. But I'm going to start by how we first met, because it's kind of a neat story. And I think it goes back pretty darn close to 25 years ago. And I answer the phone, and I hear a voice on the other end that says, I'm Greg Johnson, and I'm interested in buying a 100-ounce bar. Now, back then, the price of silver, it couldn't have been much more than $7 or $8 an ounce. And Greg says, I want to buy a 100-ounce silver bar. Okay, Greg. And Greg and I spoke for, 45 minutes. And I've always tried to be humble in the way that I conduct my business and to treat everyone the same. Doesn't matter how much money they were spending. They were all a potential client and a way for me to build my business the right way. So Greg and I talked for a long time. We do the deal and hang up, and that's that. And I get a call back from Greg, a month later. And Greg says, I'm not Greg. I'm actually David Morgan. I said, come on, man. I know who you are. I've been reading your stuff. No, it was me, but I did that purposely, Andy, because I took a test of about 12 companies. And of those companies, and you can correct me if I'm wrong, I'm going back using my memory from 25 years ago. And, doing the best I can with the limited capacity of my brain these days. But you said I took a test and you passed. Of all the people I spoke to, you are the only one who treated me with respect and kindness, talked to me longer than you needed to, placed the order, went perfect. And so I am going to feature you in my Morgan report as a preferred precious metals company. Is that pretty accurate? Is that how we first met way back when, to your recollection?
Yeah, that's pretty close. And what I was doing back there kind of as a public service was I was putting it out for, I think it was a whopping $15 or something, dealers I knew and trusted. And all I did was get criticized. So I quit doing it. But I had written the 10 rules of silver investing, which initially I kept private because, it was my work. I did it. And then after a year or so, I decided to just put it out in the public domain. But, one of the rules is don't get a raw deal from your dealer. Price is not always the main function of finding, a good dealer. And of course, I knew Tolving had already had a problem, but I kept getting this negative feedback. I didn't know what I was talking about, blah, 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 Tolving. And so I just took it off. For $15, I mean, come on. So, of course, later on, Tolving did a double dip and, went back to his old practices, and the rest is history. But I was just trying to kind of warn people. And one of the other tenets of the 10 rules was to start small. Find out how you're treated, how it's packaged, what the length of time is from delivery. Because as well as I, and I'm not really in the bullion business, but I know most aspects of the business. And that first time you write that check, whether it's 1,000, 10 grand, or 10 million, that 1 week or 2 weeks feels like 6 months. I mean, you'll get 4 calls on a first-time buyer. The first week they haven't got their metal. Look, I told you it's 10 days. It's 3 days later. Can you count? Of course, you're not going to say that to them. And then once the product comes through, it's packaged right, they sign for it, or however you deliver it. Really, it's been my experience, and probably yours, that most people, I'd say probably 80%, you probably have a number, will maintain a relationship with that dealer. Because now they got what they paid for, they got it in a timely manner. And why do I go anywhere else? I have built a trust with this dealer, and therefore, well, so-and-so sells it cheaper. I don't care. We're talking 25 cents the ounce or whatever. I'm buying from Miles Franklin. Why? Because I trust them. They got it here within a week, just like they said, or whatever the case may be. If you don't mind, I'm just going to go and kind of throw a little mud at you. It's a very slight amount of mud, but we had a problem recently. I don't even know if problem's the right word. We had an anomaly, and there was another David Morgan, and I got something from the office, and you guys straightened it out instantly, and there was no hassle, no whatever, and I mean, I've bought from almost everybody, and I'm not going to badmouth anyone on the air, but let's just say that once you establish a good relationship, and that's what you do, you've thanked basically everyone. I don't know if you can do that today with the amount of volume you get, but you never know. And I know there's another story in there, and I'll say it. You probably remember it. But somebody from my list came in and bought a modest amount. I'm going to say a couple 100 ounces or something. And then his brother happened to be like an MLB player and, wrote a pretty damn big check, for silver from you guys. And so you never know where these are going to lead. It's just the adage, the golden rule, treat others the way you want to be treated, whether it's a, 100 ounce order or it's whatever. Because you never know where it's going to lead. But if you stay consistent and you live by that motto, good things are going to unfold.
Well, and it is. And I would say that a tenet to my success, the main tenet, is relationships. People like yourself, Rick Rule, people that I've known throughout the years that have done so much for me, that in every aspect, the people who work for me, most of which are my best friends, many going back to childhood, Little League, relationships make the world go round. It's one of the things that I find most distasteful about the environment we live in, where everything is by text, by email. And that's one of the reasons I've stayed old school. And I have, because of relationships and the impact that has made on me as a person and as a businessman. They make the world go round, and you never know. Like you said, we had another person with your exact same name, and my new assistant didn't put two and two together. And, mistakes happen, but how you react to it, how you fix them, how you accept responsibility is, in my mind, how you define a person. But, at this point, I'm 19, 20. Well, I'm probably 29 years old when this was happening, when you and I connected the first time, when I didn't realize it was you. And it was not long after that I approached you at a conference in Las Vegas. You were speaking, and I waited in line patiently, and I grabbed you after the crowd of people left, and I said, David, and I was probably shaking like a leaf inside, and I said, David, I would love for you to join me around the country. We can work out a special arrangement, and I would like you, at the time I'd never done much in the way of public speaking, just a very little bit. So I said to you, David, I'll fly you out to all these money shows and whatnot if you would share the stage with me. Now, most people would say, hey, kid, I appreciate the offer, but no, thank you. You're an amazing person. You said yes. And it changed the trajectory of my career. And so you and I would share the stage. And I still remember many of the things that you say that I still use today. You once talked about the silver to gold ratio, and you drew a graph, and you said from this end of the room to the other end of the room, and you got right up next to the wall, and you said, and now it deviates. I learned so much that I took from you, but the moral of the story is that it's relationships that have shaped my career, and you were someone who taught me a lot about that, and I've tried to pay that forward with people like Maurice Jackson and many others who I have tried to help to, and I don't want to be as bold as saying mentor, but to bring along and help in the way that you did me, because it changed my life so materially that when I see someone who I think has what it takes to be successful, and Maurice has worked with my company for 15 years as a result, and I have you to thank for that, and does he. So enough about our history. It's just needed to be said. I want everyone to know how much I appreciate and thank you for doing that. And you're a hell of a guy. So, one of the things that I'm sure has puzzled you over the years, as it has me, is the under allocation, the under appreciation, and just the misunderstanding of precious metals. Rick Rule will often say that the allocation from Joe and Jane six-pack to the Harvard Endowment Fund is less than 0.5%. So in essence, people like you and I represent the pimple on the elephant's back. The elephant's coming, and that I'm kind of certain of. And I want to get your take on something. When I call you, up pops a picture of a banking crisis. And I asked you offline, is that a book that you wrote? I don't remember ever seeing that. And you said, no, it's a book you read. And the premise of it are bank failures. And it's something that I've been talking about a lot lately because of the Dodd-Frank Act, the bail-in legislation, and the gating legislation with $7 trillion in money markets, gating legislation that was written in the Dodd-Frank Act, meaning if a money market starts to go upside down, you're gated, you can't get out. That's a disaster waiting to happen, as is the bail-in legislation, because so few people know about it. And so Silicon Valley Bank and Signature Bank fail. And it's ironic that it was the Oklahoma senator who was questioning Janet Yellen. And he said, listen, Madam Secretary, in the Republican inquiry, the House inquiry, said, you just bailed out Silicon Valley Bank and Signature Bank. And that's illegal according to the Dodd-Frank Act. Dodd-Frank Act says no more bailouts. They're to be bailed in. You bailed out the banks. That's illegal. What am I missing? And she says, you're right, Senator. It is no longer law to bail out. It is bail in. You're an unsecured creditor of the bank. But it was an uber majority vote between myself, the president, the FOMC, and the FDIC that this was a systemic risk. And of course, these banks had massive amounts of money, Oprah Winfrey and the tech startups, huge amounts of uninsured money, and it was completely bailed out. And he says, well, does that mean if a bank fails in Oklahoma that my constituents will be made whole as well? No, Senator, it would require that same uber majority vote. And I think there will be a banking crisis that will wake people up. And I want to just tell you what happened on Friday. I'm not sure if you're aware of it, because it's eerily conspicuous, in my opinion, how little people or the media or any news about the First National Bank of Lindsay, Oklahoma. It failed on Friday. I want to read something to you and get your opinion on it towards the end. And it says, Friday, the First National Bank of Lindsay was closed by the Office of the Comptroller of Currency, with the Federal Deposit Insurance Corporation, FDIC, appointed as receiver. The OCC acted after identifying false and deceptive bank records and other information suggesting fraud that revealed depletion of the bank's capital. The OCC also found that the bank was in unsound condition to transact business, and that the bank assets were less than obligations to its creditors and to others. And that's an important phrase there, as you'll see in a moment. It says the OCC is referring the matter to the United States Department of Justice, which has a wide variety of tools to hold individuals accountable for criminal acts and focuses on victims in all of its matters. That's good to know. So to protect the depositors, the FDIC has entered into a purchase assumption agreement with First Bank and Trust Company based in Duncan, Oklahoma. As all of the other banks that have failed since Silicon and Signature, they've been gobbled up by regional banks or by the likes of JP Morgan. As we've been told by Powell, there'd be consolidations. Okay, great. So this bank, which will assume the insured deposits, of the failed bank, the sole office of the First National Bank of Lindsay will reopen as a branch of First Bank and Trust Company during its normal business hours on Monday, October 21st, just a couple of days ago, as we are now recording here on the 23rd. It says customers are not required to change their banking relationship to main deposit insurance coverage. Now, here's the interesting part. I would argue that what we just saw was the first bank bail-in. And where's the media coverage? Because it says for uninsured deposits. Now, they had $7 million in uninsured deposits. This is a small bank. This isn't a Silicon Valley bank with hundreds of millions in uninsured deposits. But for uninsured deposits, the FDIC has announced it will make 50% of those funds available to the depositors starting Monday, October 21st, with the possibility of increasing that amount as assets from the failed bank are sold. But we've already been told that the assets were less than liabilities. My point is, and my question to you in such a long, drawn-out manner, but I think it had to be phrased this way, what happens to this poultry allocation to metals? What happens? Do you see an awakening? And do you see something like this permeating to a much larger banking issue that wakes up the collective psyche of the public to finally start understanding what precious metals represent?
Yes. Next question.
And so do I. And I don't think it really takes much more than that, because
No, I'm gonna elaborate. I could be long-winded. Couple things. One is that how this proves how shadow banned I am and have been basically from the get-go. So I had an interview with Daniela Cambone about bail-ins, and that was when she was with Stansberry, and that has over 2 million views. In fact, to the best of my knowledge, that's the most viewed interview ever done by Stansberry recently. But it was a shadow ban. Stansberry gets promoted by the YouTube algorithms. Second point is, and most important point, and I said this right after Silicon Valley Bank, and this is imperative for people to understand, is they're going to choose favorites. Just because you're an elitist and you're with Silicon Valley, you get bailed out. But if you're just a normal plebe out there, you're probably going to get bailed in, which you just proved. The third point is that when that happened, there's been a couple other times, that's when I get, a fair amount of consultations. And the consultations go like this. David, I've listened to you for 3 years or more. Pretty much agree with what you said. I've never bought gold before. I run a business that does pretty well. I've got an exposure of $1.5 million in the bank. I've never bought gold. I want to do it, but I don't want to make a rookie mistake. Can you help me? And I mean, that's almost verbatim. I mean, I had like 3 of those in a row after the Silicon Valley Bank failure. And the amounts went from like 1 million to maybe like 8. And this is something that, it's a shock value because people that have that kind of exposure to the banking system realize they've got exposure to the banking system. I think the last thing I'll say is that we're getting near the end. I mean, Rafi Faber, I think, is very, very smart and does good analysis. Calls it the end game. And I think we are at the end game. And the last and final is, well, what happens? And here's what happens. You said 7 trillion. I'm going to use 6 trillion because the math is easier. But we've got $6 trillion or thereabouts in the money market funds that are not insured. As you said, gated. So if something happens, you can call your broker all day long and you're not going to get your money back. What a concept. So let's take that 6 trillion and let's do a little math. Let's use Rick Rule's number of 0.5%. Let's round it, double it. Say 1%. So if you take 1% of 6 trillion, what do you get? Well, you know what you get. You get 60 billion. And what is 60 billion? That's the entire silver market mining and recycling for 2 years straight. Now, when this thing starts to unravel the level that you and I both think it will, which doesn't mean the whole thing falls down, maybe just a big 10 or 20% correction. And you don't think that 1% of that money won't seek silver? I got a bridge to sell you in Brooklyn. I think so. So if you got 2 years worth of silver demand, which represents 1% of the available liquid assets in the United States, we're not talking the whole world, wants to move into the silver market, what do you think happens?
Yeah, and that's kind of what I'm getting at. And for those who don't understand, really what this means, that David mentions $1 million, and in the case of Lindsay, Oklahoma, you get your $250,000 and 50% of the uninsured deposits, which at that rate are $750,000. So half is $375. Put it with the $250, you get 6.25 back, and you may get the other $375 back as they sell the assets of the now defunct bank, and they have 4 years to do that. Let me
interrupt you, Andy. I don't want to nitpick and, with the conversation. What will happen, the way I understand it, I've written about this, is you'll get as you outlined, your 250 plus 50%. Then you get bank stock. The rest is bank stock. And now you've probably got to wait at least 4 years for the entire liquidation to take place. And then you get to cash in your stock. Now, when that's happened, in Cyprus and many other areas, I did a study on this, not super deep dive, didn't take me too long. The average return on that bank stock was 5 to 7 cents on the dollar. I just want to be clear, because you said you might, I'm not trying, I'm not picking a fight. You know me, I get very passionate about this stuff, and I don't, it's like, oh, you doom and gloomers. I try to maintain, and I've been complimented. I think most people see me as just straight up, straight shooter, facts only kind of guy. And of course, there's emotion, and of course, there's opinion. But I try to stay away from that as much as possible. And the facts are 5 cents on the dollar.
Yeah, and I've read as well that you get bank stock. Of course, it wasn't in their announcement. And if you think about it, the minute people get that bank stock, the first thing you want to do is sell it, which depresses the share price. And it's an interesting thought experiment for those who really haven't given much thought to the money that they think is safe in the bank. All right, well, good. And I'm glad that you added so much to that. This is, to me, incredibly important for everybody, not just us metal people. Hopefully that this can be passed on to other people who are blissfully, whistling Dixie through life and have money that is really very, very dangerously exposed in the banks or in the money markets. Switching gears, my man, short positions on the LBMA and COMEX. You've previously spoken about manipulation of the silver market, precious metals market by large institutions. I've read recently that there are 8 Western banks that hold the largest concentrated short position of any commodity traded ever in COMEX, on COMEX, their short position is somewhere in the neighborhood of 800 million ounces. When you go to the LBMA, we see a position of between 4 and 6 billion ounces short in a platform that admits to trading 292 million ounces of silver per day, but also admits that those numbers are as much as 10 times understated, as they only post the final settlement numbers, which would mean, in theory, they're trading up to 2.9 billion ounces of silver per day, or 3.5 times annual global mine supply. Do you believe these positions represent an existential threat to these large financial institutions? And anything else you'd like to contribute to what I just said?
Well, yes, they do. They have a bit of, I should say more than a bit, they have a way out, more or less. And the way out, of course, is cash settlement, which is what the LBMA and the COMEX can do. But really, that's sort of the game over position, because if someone is looking for physical metal and it can't be delivered and you get a check, if it's anyone of substance that goes in, whistle blows, as for example, makes it public knowledge, then that's pretty much the end of the charade. The idea with the paper markets, first of all, I'm not against hedging. I think the foundational principle of the futures market was sound, but it's been distorted so much that it doesn't serve the function it's supposed to. And all these markets are basically manipulated. I made a speech some years ago at one of the big conferences, and my speech was about manipulation. And I took it from the big picture, Andy, and I said, if you can manipulate interest rates, you manipulate every market. Because if you could price the price of money outside of the free market that determines what the cost of money should be, by inference, you've done a disservice to everybody. The construction industry, the manufacturing industry, everything. It touches everything, because the cost of money is what everybody gears themselves on. So if that's my proof that there's manipulation throughout the entire sector. Silver is a subset of a lot of different places, and it's a small market. But kind of lost it there, Andy. You picked me back up. But I just want to say that both those markets, paper markets, are, in fact, derivatives markets. And the derivatives are pricing the price of the commodity, which should not happen. As Ted Butler and many others have said, it's the tail wagging the dog. The dog should be in charge of the dog, not the tail. And at some point, this is going to manifest.
Yeah, I agree. And I think that would give rise to the Shanghai Exchange, which over the last 6 months, their volume has increased over 600%, surpassing the COMEX. And when you buy a bar on the Shanghai Metals Exchange, or when you trade on the Shanghai Metals Exchange, you first have to buy a bar from one of their 6 or 7 refineries, which is then laser etched with a serial number that is tied to a certificate. It seems as though they are exploiting the suppression on the West and using it to their advantage. And ultimately, I think, and this is just me speaking, that these are the countries that accumulate, produce, and respect and understand metals that are shifting this way as they continue to de-dollarize. And it will greatly, I think, hurt or maybe render inconsequential the LBMA and the COMEX if indeed it is cash settled or force majeure. It is the same thing in my mind as a default. And when I really began to understand this was in 2008. And you play a big role in this story as well, of course. And in 2008, we had gold at $1,000, I think, and silver at around 21. And all of a sudden, the price of gold falls by 30% to $700, and the price of silver by 60% to $9. And what was really interesting about all this, if you buy, I don't care what asset it is, you buy asset A and B, and one falls by 30%, one falls by 60%, in no way could you ever determine that or assume that those assets have any demand whatsoever. You would infer that everyone is dumping product onto the market. And when that happened, every single mint around the world, the U.S. mint was shut down 8 times in 2008. The Canadian mint and the Austrian mint were working 3 8-hour shifts, 24 hours a day. they were as much as 20 weeks or more back ordered. The Perth Mint in Australia that time shut down completely in the month of August, did not reopen, and the Rand Mint in South Africa was sold out of product for the first time in their history as one very wealthy businessman cleaned them out from Switzerland. The refiners all around the country, all around the world were sold out of product. I was getting phone calls from dealers in Ireland saying, look, we normally buy from Germany and Switzerland, can't get anything. I remember laying in bed talking to my wife saying at night, man, I don't know what we're going to do. I can't get anything. I'm one of only 27 U.S. Mint authorized resellers at this point, and I can't even get anything from the U.S. Mint. When I get a call from you, and you said to me, Andy, I know some guys. They're up here in Washington with me, and they've been in the medical device industry for a long time, and their company is called Pyromet. And they have all this silver that they've stockpiled out of recycling out of these machines. They want to get in the game. And I'll never forget those bars. They're the ugliest 100-ounce bars I've ever seen. And they don't even say silver. They said 100 ounces. Of what? It was inferred. But my point to you is that for a period of time, you rescued this industry. And that's important to on a bigger picture, as I get to the actual question. If it weren't for that relationship that you brought into the fold, none of us would have had anything to sell for at least 60 days. And it represented what everybody was selling for at least a couple months leading into the end of 2008. When the mints finally came back online, they said, fine, we will accept your order, the US Mint or the Canadian Mint. But with $9 silver, you're going to pay $17 or $18. You're going to wait to get the product. We need the money up front, and you're going to wait between 6 and 8 weeks, if not longer. My question to you is, if this awakening, as a result of whatever it is that wakes people up, a money market gating, a bank bail-in, or anything, do you see, I do, but do you see an environment where getting product is the biggest concern for everyone? You know, it's one thing for me to tell people, you better get it because supply ultimately, if 5% allocation to the public is in order, that's a tenfold increase in demand. I think getting product will be the defining factor in this industry, the defining characteristic. We've seen it. You addressed it, put a Band-Aid on a gaping hole until the mints and refineries caught up. Do you see this as something happening where you just can't get product because there's none available?
Well, obviously, in a way, you've answered your own question. It's happened before, so it could happen again. As we outlined, 1% of the money markets move into silver's 2-year supply. So the inference is rather strong. Logic would dictate that, look, chances of running out of product is very likely if the demand surges. And again, it's happened in the past. And I think to make the distinction that I've made previously is, the two markets of the silver market. I'm not talking about industrial and monetary or investment. I mean retail silver and industrial silver or commercial bar silver. And sometimes we can have a retail shortage, and yet the silver market, which I refer to as, the derivatives market, that is backed by a small amount of physical 1,000-ounce bars relative to the amount of paper that's traded, it nonetheless exists, and that's what sets the price, or that's what backs the price, as long as the supply holds. So my point is, Andy, that, yeah, it's going to happen, and I think it could happen in several ways. But one that I think is one that is not really talked about too much, and that is not the industrial supply, which has been eaten away. The industrial demand has gone up 2.5 times in the last 25 years. So think about that. It was 35% of the market in 2000 and 60% of the market now. And the supply of silver on an annual basis for mining has gone from 550 million ounces annually to 850 million. So that's a huge increase. In fact, if you didn't increase the mine supply from 2000 till now, had that same number, 550 in the amount used, you're looking at like 70 or 75% of the market would be industrial. But I digress. My point is institutional investors, because institutional investors buy commercial bars for investment. When Buffett bought 130 million ounces of silver, he wasn't buying 100-ounce bars. He was buying 1,000-ounce bars directly from the COMEX. And he's the last one to do that. They changed the rules after he made that purchase. So I want to go on. If you look back to 2020, we had 320 million ounces of silver, meaning 1,000-ounce bar silver bought by institutions through the ETPs, and our what's normal these days, 200 million bought by retail. So I can add that in my head. That's 520 million ounces of silver bought for investment purposes in the year 2020, the year of the illness. And that is over half the market. It's a billion-ounce market, mining and recycling combined. Now, I am going to ascertain that perhaps this is what happened. In Davos, that are known as the WEF these days, Scott Meener was asked by Bloomberg financial guys, what was his go-to investment that year? And he said silver, and these guys practically fell off their chairs. Silver? They didn't know what to do. I mean, it really shocked them. And so one of the guys recovered, I'm exaggerating slightly, and said, well, okay, why not gold? And Meener said, because gold is very close to its all-time high. But silver is off, I forget the percentage, Andy, 40%, I forget. It was a big percentage. And it represents a better buy. Now, I'm not saying as the chief investment officer for Guggenheim that he bought 300 million ounces of silver in the ETPs. I don't know. But somebody did. And that's all of it, more or less, over the next couple of years was sold back into the ETPs, or into the market, I should say, off the ETPs to somewhere. All it would take is one or two, instances like that. And it's interesting because it's my belief, and this gets a little bit on the, put your hat on situation, but I think that it's well known amongst the banksters that you really couldn't touch the silver market in size because it's such a small market. And people say, well, silver be remonetized. The answer is I don't know, but I doubt it unless it really gets to gold silver ratio that's meaningful. Because if you're talking about 1% of the money market funds represents the entire silver market for 2 years, how much good is that going to do to monetize it, Andy? Not very much. It's 1%. All right, it goes up tenfold, all right? Well, now we're talking 10%. Would that be meaningful? Well, maybe. It might. But you'd have to get at least a 10 bagger for it to have any consequence in the money markets. Otherwise it's just a one-off. And that's another problem with the silver market. I'm going to go on. You can stop me if you'd like. Bit of a tangent. The problem, and this one's is one I hear very few analysts talk about. It's kind of unfortunate. They talk about it, but they don't dig deep on it. But 70% of the silver market is byproduct mining. And the problem with that isn't that they get silver with lead and zinc and gold and copper. That's not the problem. The problem is how it's treated. It's treated like a red-headed stepchild, as the expression goes. Because a copper miner could care less what the silver price is as long as their bottom line, copper mining is making a profit. So they look at silver as the stepchild. They don't care what it's worth, and they wholesale it out for practically nothing. It's a bookkeeping entry against their primary business. And the same is true in lead, zinc, or gold. I mean, the gold mining industry produces 13% of the silver. So if you had 70% of a product that most people don't even care about it, or what it's worth or anything, then that really could suppress the market. And the other part of it is that our industry is pretty smart in the ingenuity of the human being, because people like Chap Mercantile, the forerunner to Silver Wheaton, which is now Wheaton Precious Metals, saw, hey, if you don't care about this silver, let us buy it from you as a stream. We'll give you some financing. Here's what we'll do. And so that started a whole new industry, basically, in the mining industry or the royalty space. So I did go off on a tangent, but there's a lot of these factors that are aligned about silver that obviously I think about a great deal, but I want to say it's glossed over, Andy, but it's not put in the proper perspective. And that's another thing. I know you're going to ask about Fridays in the futures markets, and I can hardly wait to answer that question.
Well, I'm happy to ask you about Fridays in the futures market. Why the hell does the price go down every Friday? What's that all about?
Well, it comes back from the early days in my studied opinion, and that is that the floor traders, which really don't exist anymore, had to square their books. So as you said earlier, the LBMA, they only show you the end result of the day. But they don't. There may be a guy, like me in my youth, was pretty aggressive and pretty juiced up, not boozing or anything, just a lot of energy. And he's trading in and out, in and out, and in and out. Maybe he's made 100 trades in the day. But the end of the day only shows the end result. And so what happens for the floor traders, those people that are trading, making a living at trading, square their books every Friday. They want to go over the weekend without being long or short. So they go neutral over the weekend, because if a bank fails, a war starts, a hurricane hits, you name it, something outside of their control hits the market, maybe all of a sudden that market's up limit or down limit, depending on which, position they have on. They don't want any positions on. And that's why they square their books, and that usually sends it low.
Does that put any greater significance on this last Friday's market action, where we saw silver all the way up to 35? Didn't close there, but touched it. A massive update. Does that add any significance, or is that just a one-off or an anomaly, or just no?
No. It looks that's a big important point. They were closing near the high. In fact, I did a quick video for my subscribers on that. And what that means is these guys are waiting to the last possible minute to square their books. And they said, screw it. I'm short. I'm getting out. I've got to buy back. So a lot of that tippy top stuff, which wasn't a lot of volume, floor trader type of volume, was because I'm going flat. As much as I can't believe silver's above 33 or whatever their mindset is. Now it's at 35. I got to get out. I'm taking that $2 loss. I'm happy. So that's very bullish.
Do you see a point where that happens with the big short positions on both COMEX and the LBMA, where one of these big commercial banks says we've been acting in concert together in what appears to be a collusive manner, but I'm out, I'm covering, sorry, it's everyone for themselves? Do you see that as a possibility as things get crazier?
A remote possibility. I just put up a new Twitter. I did this for my members. I put the article on Twitter. Financial Times, very short article. It said that 5 major banks are in dire straits, my words, not theirs, for a massive short position in the silver market. Boy, it brought back memories of Ted Butler. Ted always said 4 majors. This article said 5. They didn't name the banks. And they said that they were short right now. And actually was basis a couple of days before the Friday close we're talking about. It was above 33. We're upside down $1.2 billion in silver and $1.5 billion in gold based on the recent move. And that they had to do something to protect the industrial users of silver and the financial markets. I actually read this to my membership because I thought, wasn't that interesting how these entities are going to make sure that the financial markets and the industrial side are protected. What about the investors, you blankety blank, 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 blanks? I mean, your edict is supposed to be a fair market, unencumbered. Market forces are supposed to dictate what the true settlement is. And yet you're going to jump in and be real do-gooders to make sure the financials. So then what happens, and this is getting to your exact question, you already know the answer, just reminding you or refreshing the audience, they'll start raising margin requirements up and up and up and up, and that will take care of all 5 banks. And what people don't know, and I have to go off on a tangent here, Andy, is I was in Palladium. I used to trade the whites, especially around January. It was almost a gimme. I had 4 on in Palladium, and Palladium had that massive move, and I was in, and the bank called me and said, hey, you got to put up more margin. And I was so naive in those days, I didn't realize that you could get a margin call if you're on the correct side. I said, wait a minute, I've got 4 contracts long that just, went up $50 an ounce on 4 contracts. Well, I was thinking of adding, no, margin across the board. If you don't wire X amount of money into the bank, by, whatever it is, the 3-day, 4-day rule, we're going to take you off. So I got pushed out of my position, and that position I would have made well over $550,000 on that trade if I was able to stay in. But that's beside the point. I'm kind of bragging here. I don't mean.
You just taught me something I didn't know. I never knew you'd get a margin call even when your position was up.
Correct.
When they raise the rates, it affects everybody, which would bring down those people like yourself at the time who didn't have the money to send in. That's really, well, if that isn't something never heard.
Here's the end of the story, and you won't even believe this, but you can look it up. At the top of the market, if you were in the futures market, you had to put up double the cash of the cash price. That's how they got everybody out of the market. And then they did the same thing in palladium they did in the nickel market recently, and that is we'll take control of the physical market and we'll decide who gets the metal and we'll decide who gets to lease it over time. Talk about a free market. I mean, I'm still solid about sound money and honesty and integrity in the financial markets and everything that our sector represents. But it's really tough when you've got the controllers, I'll call them. I don't think that's too harsh at all. But when you got the LBMA and the COMEX and you got these entities that favor one group over another, obviously you don't have a free market. And when things go against them, well, they just make up whatever they need to settle the market down and quiet it down and make sure everything comes out okay. Disgusting. But that goes back to your question. Do you think, David, we'll get to a point where it could happen in silver? The answer is yes. Again, I'll say yes. The problem with them is there's a lot of us. Miles Franklin and many, many others have enlightened people about the true nature of a fiat monetary system. And so there's a lot of silver stackers out there that they really can't take advantage of because they've got physical silver in their back pocket.
That is actually very enlightening to me, something I never knew, and makes me look at things rather differently immediately. Interesting, to say the least. 2 questions left for you, David, in respect to your time. And this is one that I have an idea I know what you're going to answer, but you've watched, I'm sure you've followed a little bit of what I talk about a lot over the last 3 years, and is the formation of the BRICS. The BRICS have their meeting going on right now in Kazan. And with all of these BRICS nations, in particular, China, I did an interview with Sean Kun from Dolly Varden. He says China's flying. Most people don't know China's the second largest producer of silver in the world, and they are now flying around, according to Sean, and I've validated with another friend in the industry, that they are flying around Latin America and paying nearly double what the West will pay for unrefined doré and concentrate. You look at India, who has imported 6, 7, 800 million ounces over the last 3 years. It is now at all-time highs in India, in the rupee, silver, as I was surprised to learn that today. And Russia, who has now said we are going to put this into actually our state fund, that the state is actually acknowledging that silver will be accumulated much the way that nations accumulate gold. How do you see this impacting the global demand for silver and precious metals in general?
Well, it'll only increase. And I have to give you a couple of anecdotes here, Andy. When I was in Beijing, I met with the Mining Bureau. In fact, got kind of the royal treatment. They came and met us at the airport, and also talked to the bankers. They were very inquisitive about, how we recycle our silver. And I said, we don't. We're pretty wasteful, because they didn't want to waste anything. And the other thing that they just kept telling me again and again and again was that they're the number 1 producer of silver. They are not number 2. And whether they are or not, I don't know. I really don't care. But they just wanted me to know this. As far as they were concerned, they were the top.
No, they probably are. They don't tell us much. I think that their numbers, everyone always said my whole career, the numbers they tell us are way understated. I would believe that. So in essence, you do believe it will impact the market. I do too. I think they've moved away from holding treasuries and dollars into tangibles, as Zoltan Pozsar calls it, Bretton Woods 3. That was kind of a softball but I had to ask it. Last question, my man. I know we've been going about an hour here and want to respect your time. And again, David, thank you for coming on. It means a lot to me. Silver's real potential. Taking all of this into account, the BRICS, the 4-5 year systemic or structural rather deficit. 6 years, I think it was 1.2 billion short, 230 or 40 million ounces short this year. The increased demand in markets like China and India, the BRICS nations. This is the one question everyone I hope stuck around long enough because they all want to know it. Where does David Morgan believe, what is the real potential for silver? Where does David Morgan believe it's going to actually go? How high can it go?
Well, that's indeterminable. I mean, I said $100 back in 2002. Let me read you a statement. We put this together years ago. In fact, I did this in 2002. David Smith reminded me about it. We've used it from time to time, but I wrote this, quote unquote, I'm quoting myself. Please, people, ego aside, you asked the question, here it goes. For the record, I will state there will be another, more frenzied scramble, which will carry silver prices to highs that will repair all the excess paper money creation, price suppression, supply deficit, and bearish sentiment over the past 2 decades. This will become known as the Great Silver Crisis. Yours truly, 2002. As far as where we go price-wise, I think what you do is probably the best way to look at it, Andy, and that's to look at the nominal gold-silver ratio over the near term, which is around 30, you could say 40. So I think the top of the market will easily be, 40 to 1, 30 to 1. So if gold's at 3,000 at 30 to 1, you've got $100 silver. If it's 40, it's less than that. If gold makes it to 6,000 and you're 30 to 1, you've got $200 silver. I really believe that because, the old adage that he who owns the gold makes the rules may be true. Central banks have been net buyers since 2011. And gold is really the establishment metal, even though it's not talked about. You did a pretty good job, very good job, of talking about a tier one asset after Basel III, and I think you did a good job of explaining it to the market. But if you look at it from my perspective, he who owns the gold makes the rules, but he who owns the silver derives the technological future of the world. So if all us little peons that stacked silver got to a position where we owned it and they didn't, and they needed to continue the technological advance with AI, EVs, solar, and everything else that silver does is the best conductor of heat, reflector of light, then maybe, just maybe, the power of silver, the true power of silver, will come back into the hands of the people. And that's something, of course, I have strived to tell that story. And of course, you can make up your own darn mind whether, it makes sense to you or not. But I know that if I'm going to make a move into an asset class in the precious metals currently, I really wouldn't be buying $2,700 an ounce gold. I would be buying platinum that's half the price of gold, or I'd be buying silver that's, 1/80th the price of gold. And I have to tell you one more, maybe as a humorous thing, but one of the early on shows that I did was in Vancouver called the World Outlook Conference. And Jim Dines was there. And, I admired Dines for many years and got to talk to him. And, now I'm on stage with him and all this stuff. But it just hit me when I was on stage. And I just said what I just said a moment ago, but I think it ended my pitch pretty easily. I said, silver reflects light better than any material known to man, and it conducts heat better than any material known to man. So those that don't see the light are going to feel the heat.
David Morgan, there it is. The best in the business, the silver guru. You're the legend and probably the foremost expert in this industry. I thank you for walking down memory lane with me, David. I thank you for everything you've helped me achieve. And I thank you for being a friend. How can people learn more about you? Because, after listening to you for an hour, I'm sure there will be a lot of people that would like to hear from you a little bit more. What's the best way to follow what you're still doing?
Well, the best way is go to the main website, themorganreport.com, and sign up for our free letter. If you're interested in subscription, just hit the subscribe button and you'll get all the information you want to make a decision. Top of that, Andy, I'm not doing any more books. I'm doing a documentary. It's called Silver Sunrise. You can go to silversunrise.tv. If you want to be, a contributor to the effort, it would be appreciated. We are done interviewing everyone we're going to interview, with the exception of Robert Kiyosaki. And we've got Robert lined up. Thanks for your help on that. I think it's about a week and a half, like 10 days from now. Once he's in the can, as the slang goes in the movie business, we will be editing. Hopefully we'll have it out around Christmas time. And hopefully we'll get enough information out and it'll be liked enough by the community and beyond. I mean, I'm making this for everybody. But I hope that the documentary's purpose is, as always, to get you to think. Think for yourself, think critically. Don't spend a lot of time on the problem. I look a lot more to solutions and, how we as humanity need to look at money from maybe a different perspective, because the emphasis is on the control and the stress that money produces. The reason being that we're in a phony system that actually dictates to us the fear and control of money, where we don't have to have it that way. We can't have a monetary system that's a level playing field for everyone. And that, of course, has been my life's work. So I might have drilled on that a little too long, Andy, but it really means a lot.
I mean, hey, to emphasize your life's work, that's not drilled on too long at all. And can't wait to check it out. If you'd send me a link to that, David, I will add it to the bottom of this video so people can contribute to what is a very worthy contribution, and I'll do so myself. Again, David, thank you for joining me, my man. And in parting, I will say, I remember one of the last times I saw you, you said, when silver gets to, I think you said 50. This is a long time ago. You said you're going to have a cocktail party and you're going to use kilo silver coins as coasters. So when that happens, whatever that number is, make sure
$100. And
right,
if it does, I will throw a party here in Spokane, and it will be one heck of a shindig. Yeah.
Well, I'll just make sure I make that invite list. I'll say I remember when he told me. David, I love you like a brother, man. Thank you for everything. Stay well, and until next time, I'll look forward to picking up where we left off, my friend.
My pleasure, Andy. Thank you for having me.
Little by Little with Andy Schechtman.